Ladies and gentlemen, good day and welcome to Repco Home Finance Q2 FY'25 earnings conference call hosted by Yes Securities. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Rajiv Mehta from Yes Securities. Thank you, and over to you, sir.
Yeah, good evening, everyone. Welcome to the second quarter FY'25 earnings call of Repco Home Finance. We thank the management for giving us the opportunity to host them once again. From the company, we are joined by Mr. K. Swaminathan, MD and CEO, Mr. T. Karunakaran, Chief Operating Officer, Mr. P. K. Vaidyanathan, Chief Development Officer, and Mr. M. Raja, Chief Business Officer. I would request Mr. Swaminathan to give us an overview on the company's performance, post which we'll open the call for Q&A. Over to you, Swaminathan, sir.
Thanks, Mr. Rajiv. Welcome all. We would like to welcome you all for the earnings call of Repco Home Finance Limited for the quarter ended September 30, 2024. We are happy to announce that the growth momentum seen in the last few quarters has continued in Q2 FY'25 as well. The company is progressing on its business parameters and is positive of meeting its guideline numbers. The profitability parameters have improved steadily in the second quarter compared to the period a year ago. The structural changes that have been brought in the process across the organization, like delegation of powers, implementation of new software, verticalization, etc., are yielding results, and we are confident that we would be able to see the combined impact of all these changes in the months and years to come. Business updates. We have disbursed 867 crores of rupees in Q2 FY'25 against 797 crores in Q2 FY'24 and 680 crores in the previous quarter. Our sanctions stood at 926 crores in this quarter as compared to 860 crores in Q2 FY'24 and 727 crores in the previous quarter. The overall loan book at 13,964 crores at the end of September 2024, as against 12,922 crores a year back, registering a growth of 8.1%. The ratio of exposure between non-salaried and salaried segment stood at 52% and 48% respectively. The share of non-housing loan, that is home equity, stood at about 26% of the loan book, and housing loans contributed to about 74% of the book. Quality of the loans. GNPA amounted to 552 crores as of September 30, 2024, as against 636 crores as of September 30, 2023, and 583 crores as of June 30, 2024. Net NPA stood at 217 crores at 1.6%. We have a total provision of 489 crores with a provision coverage of 61% for stage 3 assets. Our systematic and relentless action on NPA accounts is yielding results. As of September 30, 2024, we hold 485 crores of restructured portfolio outstanding, of which approximately 154 crores are in stage 3 and remaining in stage 1 and 2. Profitability. Our NIM for Q2 FY'25 was at 5.1% against 5.4% in Q2 FY'24. The company has been able to maintain a spread of 3.4% by raising yields to 12% despite facing stiff competition at our pricing levels. The net profit grew 15% YoY, amounting to 113 crores for Q2 FY'25, as against 98 crores for Q2 FY'24 and 105 crores for Q1 FY'25 respectively. Our ROA stood at 3.3% and ROE at 16% for Q2 FY'25, as against the respective figures of 3.1 and 16.1% in the year ago quarter. Cost to income ratio for the quarter stood at 26.4% as against 23.6% of the previous quarter. New software. Phase 1 of the project, comprising of LLMS and EGL, is stabilized. Phase 2 of the project, comprising software relating to support functions, are in various stages of implementation and testing. A total of approximately 27 crores have been spent so far on the new software. As of September 30, 2024, we have 227 touch points across 12 states and 1 union territory, comprising of 184 branches and 43 satellite centers with additional 2 asset recovery branches. We will be touching approximately 250 outlets by March 2025. I will summarize the key financial highlights before opening the floor for Q&A. The loan book stood at 13,964 crores. PAT for the quarter was 13 crores, which is 15% increase YOY. ROA and ROE for the quarter stood at 3.3% and 16% respectively. The core profitability has remained strong with a solid spread and margin of 3.4 and 5.1% respectively. The gross NPA is at 3.96% with a stage 3 coverage of 61% of the principal, and the net NPA is at 1.6%. Way forward, we have recruited people with experience in sales and collection verticals. With this additional strength, our focus would be on taking the growth numbers to the next level and reducing our overdue numbers, and we are quite positive on this. The company is geared up on achieving the targets set for FY'25 in terms of profitability, GNPA reduction, disbursements, and AUM. We thank each and every one of you for evincing interest in our company's growth story. Thank you once again, and we now open for the question and answer session.
Thank you very much. We will now begin with the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We take the first question from the line of Vikas Kasturi from Focus Capital. Please go ahead.
Yeah, good evening, sir, and congratulations on a fantastic quarter. Sir, I have 2 questions. So one is, in the presentation that you shared, could you also start sharing some color on how the old portfolio, that is prior to FY'22, is performing, and the new portfolio which is being written after FY'22, right? So I think you have already disbursed about 7,500 crores plus in the last 2.5 years. So it would be good to know how the two parts of the portfolio are performing, sir. So that's one request. And the second one is, in the month of May, you had shared some goals for this particular financial year with respect to, you said AUM of 15,000 crores, 250 outlets, 3,800 crores of disbursements, and GNPA below 3%. So could you just share your perspective on how are we faring vis-a-vis the goals? Are we likely to reach our goals, overshoot our goals? Some color on that, sir. Thank you very much.
Thank you, Vikas. See, out of the 7,000 crores we have dispersed, 50 crores is the NPA of the last 3 years, 22, 23, and 24. 50 crores approximately is the NPA numbers. So NPA percentage is around less than 1%. So the new book, as far as NPA is concerned, is performing reasonably well. But as regards goals, we have also discussed internally. So we still maintain our guidance as far as disbursement is concerned. We had told between 3,600 to 3,800 crores. We still maintain that number as far as disbursement is concerned. But on AUM, as of now, because of the repayments or the run rate that is going up, maybe instead of 15,000 crores, maybe there is a likelihood that we may fall short. Maybe instead of 15,000 crores, we may be around 14,800 or something. This is our expectation. But too, this is an organic growth. If at all we come across any book buying or any DA transaction that we may encounter during the next 2 quarters, definitely that is added. Still we will be reaching the AUM numbers. GNPA, we have told 450 crores as a GNPA number. We still maintain that. As far as number of outlets are concerned, we had given a guidance of 250. I think we already have 227 outlets. We have already opened 2 branches this quarter. So we are hopeful that by the year end, we will be anywhere near to 250.
Great, sir. And thank you for your responses. And if I may ask one more question, sir. On the liability side, we seem to have majority of our borrowings from commercial banks. In the future, is there any plans to add, say, securitization also as one of the means of raising funds? Could you just throw some light on that, sir?
Okay. Maybe as of now, liability, we are also approaching NHP. So the NHP proposal is in the pipeline. So maybe we may get some NHP loans during this current year. We are also thinking of tapping the market through our NCD routes and all. We have got approvals from AGM as well as our board. So if time is favorable to us, definitely we will tap the NCD market. We have not got any fixed plans as far as securitization is concerned. Of course, DA may not be there. We will see any PTC transactions, if at all anything is coming by, we will have a look. But as of now, we do not have anything on the table.
Thank you, sir. Thank you for the responses. I'll come back in the queue.
Thank you, sir. We take the next question from the line of Raghav Madhavan from Kotak Mahindra Bank Limited. Please go ahead.
Sir, congratulations on the recent results. So, sir, I would like to understand in very similar lines to the previous question. So, if you can just pick out the last 2 years cohorts, and in that, what are the early bounces and delinquencies? Say, PAR 30. What is the PAR 30 in the last 2 years cohort?
Thanks, Raghav. I do not have the numbers right away. Maybe we will be able to share. But to my understanding, the percentage is lesser than the old book. To that extent, I can say, but the exact numbers I do not have.
Okay. Sir, if not, some guidance on typically after, what period of time in your loans you would see increase in stress levels coming up. Some guidance for that. Would that be possible?
I think Mr. some cross. Can you mute your sir?
Mr. Raghav,
I'm hearing something else.
line, sir.
Okay. Raghav, as of now, I am not seeing anything alarming in the new book. Nothing alarming. Of course, overdues are there, but comparatively, as I said, the overdues are, the percentage-wise overdues are lesser than the older book. But still, as you say, there should be at least a 3 year seasoning before we can straight away call that the book is holding well. The 3 year period is still not over, but as of now, there is nothing alarming. At least there is not much of serious NPAs or early mortalities on NPAs.
Understood. So no, definitely put in the same question. So, what percentage of your existing NPA, from your NPA, the recent 3 years NPA would be contributed to it? On the legacy portfolios, what percentage of that?
That's what I was telling you. Out of 552 crores, 50 crores is of the last 3 years slippages, last 3 years book. So remaining 502 crores are the old ones. So out of 7,000 crores, I do not know what is the exact outstanding today because some repayments also would have happened of the disbursements that we have made in the last 3 years. So I do not know the exact outstanding, present book outstanding of the 7,000 crores we have disbursed in the last 3 years. Assuming that some 1,000 crores have been repaid, so 50 crores out of 6,000 crores of outstanding is the NPA percentage of the last 3 years.
From my side, what is the total write-off, sir, for the last 12 months?
13 crores. In the last 1 year is 13 crores. The entire history of the company, this 13 crores is only a technical write-off. Entire history of the company, actual write-off may be less than 15 or 20 crores.
Understood. Thank you, sir. It was very helpful.
Thanks, sir.
Thank you, sir. The next question is from the line of Aniket Kulkarni from BMSPL Capital. Please go ahead.
Yeah, good afternoon and thanks for the opportunity. So to reach our targets of 3,700 crore disbursement for FY'25 as a whole, we have to grow about 30% in the second half on a year-on-year basis, right? So now given the company's track record on the growth front in the previous quarters, this seems unachievable. So, if you can give a realistic growth target for the second half and, why, if you can explain why are we finding it tough to grow in double digits where other NBFCs are reporting such strong growth numbers, if you can please explain.
Thanks, Mr. Kulkarni. I could not understand the second part of your question, but if the question is related to whether we will be able to reach the number, whether the second half will be better than the first half as far as disbursement, yes, definitely. 2 or 3 reasons. One is we have started recruiting people for the sales vertical. Those people have started joining, and some more people are in the pipeline. So these new sales people, we call them BSMs, these new sales people will be able to deliver because we have recruited them from the market. That is a confidence that we are getting for the improvement in numbers. And historically, this company, the second half will always be far better than the first half. Especially the first quarter of a year will not be all that good, but the third and fourth quarter should be reasonably good. So based on that and based on the new initiatives that the management has taken, we are quite confident that we will be able to do around 2,000 crores of disbursement in the second half.
Okay. Thank you, Mr.
Thank you. We take the next question from the line of Rudransh Kalra from MB Investments. Please go ahead, sir.
Am I connected?
Yes, sir. Please go ahead with your question.
Yeah. Hi, good evening. My question to you is, what is your strategy going forward? There are so many competitors like Aadhaar, Aavas, and there is NBFC and small finance banks, MFIs, everyone getting into the housing finance, particularly affording housing finance. And what is your moat? And how do you differentiate yourself from these companies? I would like to particularly know what the moat is for Repco against Aadhaar, say Actors, and the other affordable housing finance companies. Thank you.
Thanks, Mr. Karasi. The names that you have mentioned, I think the profile of the customers they are targeting is slightly different from our customers. You would have seen most of our customers, at least more than 50%, are all documented income customers. And our CIBIL score on an average itself is around 750 are all the new borrowers. So that way we are totally different. On the interest rate front, yes, of course, these companies, the names that you have mentioned, their interest rates are far higher than ours. So we are in between pure prime housing finance companies and the companies that you have mentioned. So our average rate is around minimum lending rate is around 10.10% as of now, compared to the interest rates of the other two ends. So this is the differentiator between our company and the other companies.
Okay. The other question, there's another question. Hello?
Yeah.
Hello? Just a second.
Yeah, Mr. Kaur.
Yeah, the other question is particularly towards your business development head or sales head. You guys have said that 15% would be the disbursements around that, but I don't think, I'm not sure if I'm wrong, but I don't think it's at 15% as of now. So if you could shed light on the strategy and how you going to go about and reach to the 15% number or somewhere close to that. That'll be really nice.
Mr. Karasi, I will ask Mr. Raja, our Chief Business Officer, to answer this because the points I have already mentioned, what are the strategies and all. Anyhow, to reiterate my stand, Mr. Raja will also add.
Yes, Mr. Kalra, Raja here. You see, traditionally speaking, in our organization, the H2 numbers have always been higher than H1 numbers. So even though my H1 is not 50%, we normally expect a better business in Q3 and Q4. That is one part of it. The other part, we are already in the process of recruiting persons and resourcing the hardcore salespersons in the market. So they are all joined or they are all expected to this quarter. So our sourcing would get better, and we are also adding multiple sourcing channels like our corporate DSAs, my connectors, my traditional walk-ins. So we are focusing on all the sourcing channels. So we believe and we are sure that our business will be better in Q3 and Q4 so that we can meet the committed numbers.
Okay. Just to follow up on that, and is this also being done by the other affordable housing finance companies? I'm sure pretty much they must also be doing this.
See, more than me comparing with others, I'm giving out my strategy. Yes, everybody would be aggressive, and it is a general trend that Q3 and Q4 would be good, and I hope so.
Cool. Thank you so much. The questions are answered to quite a lot of my satisfaction. Thank you so much.
Thank you. We take the next question from the line of Bunty Chawla from IDBI. Please go ahead.
Thank you, sir, for giving me the opportunity. Sorry I joined late if I am repetitive for that. In this quarter, what we observed, there has been a higher repayment rate or repayment ratio as compared to last few quarters. If you can explain that part, what is driving this and how one should see this rate going forward for next 2 quarters?
This is a valid point, Mr. Pandit. Nobody else, the others have not asked this particular question. I agree with you, I concur with you. The repayment rate has actually gone up. We are now getting a repayment of around 200 crores approximately per month. It was around 170 crores 1 year back, something per month. This includes a normal repayment of around 50 to 55 crores, as well as prepayments and takeovers. Comparatively, the BT outs are slightly increasing on the higher side, especially in the second quarter, it is on the higher side, maybe because of the competition, especially from bank side. The bank's rate, we are unable to compete at the rates that we are being offered by banks. That is one reason. So BT outs, in our view, is inevitable because the rate differential between our rates and the bank rates is too much for us to match such rates. What is the strategy is, one, we have to increase our BTs, that is one thing. We have to increase our disbursement numbers so that net to net, we are a gainer. These are all the strategies, and how we are increasing, I think this has already been answered. So the way out is how to prevent. Beyond a point, we cannot prevent. Of course, we have got a strategies of calling them, retaining their customers, having our own way of through a CIBIL check. We are finding out which are the customers likely to go out, meeting them, trying to see whether it is possible for us to reduce interest rates so that they retain with us. All these strategies we are adopting. But despite that, I should admit that some portion of our repayments are BT outs, and we have to live with it, and we have to increase our disbursements to match.
Okay. So in that case, our target was 15,000 crores to reach by FY'25 AUM. Is it achievable now?
That's what I said in the initial question. So maybe if the same rate of repayments happen, and if you are going to do only around 3,600 crores, I do agree, maybe we may fall short by around 100 to 200 crores of our 15,000 crores of guidance of AUM that we have given. But this is only if it is only 2,000 crores. If for some reason we are able to increase, see for example, the government has announced the new scheme, housing finance scheme. So if we are able to get good numbers through this scheme, or by opening new branches, the new branches are contributing more, or things like that, we may be able to even surpass. Again, these are all organic growth. There is also a possibility that we may come across any inorganic book buying, DA transaction and all that. That may also add to our things, and we may reach. Worst scenario, if we go only on this trend, and if the repayments are also at this level, maybe we may fall short by around 100 to 200 crores as far as AUM is concerned. But disbursements, we have discussed with the team also. The team is also confident that we will be doing around 3,600 to 3,800 crores.
Okay, so that was very helpful. Lastly, on the margin front, if there is though currently it does not seem to be a rate cut situation, but if the rate cut happens, what will be the impact on our margins for us?
Okay. See, as far as the current rate is concerned, we have also been passing on mostly. In fact, we have increased our MLR by 10 bps from this month. So already one increase we have done on the month of May. So 20 bps we have already increased in the current year. In case it starts falling, we do not expect that to happen immediately. In case it starts falling, I do not see any outflow immediately. And not only that, we are also repricing every quarter. So any downward movement also will get repriced within 3 months. So the customer will be given an assurance that such rate cuts will also be passed on to him. So he will also get that benefit.
Okay. Okay. Thank you. Thank you very much, sir, for that.
Thank you. We take the next question from the line of Anand Mundra from Soar Wealth. Please go ahead.
Hello, sir. Sir, congratulations on good results. So one request, can you give the breakup of GNPA on old book and new book as part of quarterly presentation?
Yes, ma'am. Yes, Anand. Yes, yes. Suggestion is taken, sir. We will definitely take it. But what is new book, what is old book is how to decide.
Pre-COVID or post-COVID or when your tenure is started, whatever. Because sir, old GNPA is actually giving a wrong picture with respect to NPA profile of the company. The second question was,
okay,
is there any possibility of writing of GNPA, though I know it's recoverable, but so that the headline GNPA number reduces and we may get better credit rating?
See, credit rating is not only dependent only on GNPA numbers. Credit rating, they analyze various other factors. As far as writing off is concerned, this company has not done any actual write-off, but technical write-off, yes, we have done. Definitely, we will take a view. May not be in the third quarter. In the fourth quarter, we will definitely take a view on the technical write-offs.
Yeah, because there will not be any impact on the P&L, but it will just be a return off because you already have a provision, sir.
Yeah. It's quite possible.
Third question.
Maybe the company will take a view in the fourth quarter.
Okay, sir. So third question was, what is the reason for increasing depreciation and amortization expenses in this quarter?
There was a small mistake in the first quarter, sir, on the write-off use assets. Okay, that got rectified in the current quarter. That is the only difference. There was a small error that we rectified.
Okay. So this number is slightly higher than the normal number, this quarter number.
But if you average, you are right, Anand. But if you average, I think it will be same. See, 5 plus 5, 50 lakhs was the last quarter. I think 2.75 per quarter. I think if it average, it is same every quarter, more or less same.
Okay, understood. And sir, what is the guidance on credit cost for this financial year?
Credit cost will be marginal or almost nil. It will be very much negligible because of the recoveries we are making. In fact, write-backs will be more this time because we have already estimated a write-back of 50 crores for the current year. We have done around 13 crores this quarter. So actual credit cost may not be much. I think we should be able to absorb any new NPAs.
Okay. And sir, are there any slippages in NPA in this financial year, in the first 6 months? Because of recovery, it may not be reflecting because...
You are right. See, I do not have for the full year. For the current quarter, I can tell 37 crores was the slippage, 67 crores was the recovery.
How much was the slippage? 67 crores.
37 was the slippage.
Okay.
67 was the recovery.
Okay. And sir, your guidance on disbursement for this financial year, you said it's maintained at 3,600, sir?
Yes, sir.
Okay. And sir, any possibility of increasing dividend for the shareholder? The dividend payout ratio is very poor. As such, we have enough capital for growth. So,
I think I am not the correct authority to do it. It will be decided in the board. But I think 30% is a reasonably good dividend in my view. But still, it will be taken view by the board.
Actually, sir, if you compare it with the EPS, then the percentage number is very low. So, it can be with respect to if the EPS is much higher. So with respect to share price, face value, sir, it is 30% is good, but with respect to EPS, the number is very low, sir. So you can propose this to board if at all it is accepted. Yeah.
Your point is taken, sir. When we are proposing, we will say, yeah.
Thanks a lot, sir. Thanks a lot.
Thank you. Before we take the next question, a reminder to all the participants, if you wish to join the question queue, you may press star and one on your touchtone telephone. The next question is from the line of Abhijit Tibrewal from Motilal Oswal. Please go ahead.
Yeah, good evening, everyone. Thank you for taking my question. So the first question is, again, I'm just trying to understand, if I look historically, your Q2 disbursements have always been slightly lower than Q3 disbursements have always been slightly lower than Q2 disbursements. So if you could just explain why that is the case for us. We don't see it in the rest of the mortgage industry. So, I mean, anything unique to us with regards to geography, Tamil Nadu, Karnataka, where we are majorly present? And is that the same expectation that you have for this quarter as well, that sequentially disbursements might be a little lower than Q2? That is the first question. The second one is, OpEx this time was slightly elevated. So I don't know if you've addressed this earlier in the call. Are there any one-off items which are there which has led to slightly higher OpEx for you in this quarter? And thirdly, I mean, I'm seeing, very good traction on our fee/non-interest income. Anything that you're doing there structurally which might improve your fee income or non-interest income profile? Those three questions.
Thanks, Mr. Abhishek. See, this Q3 is slightly lower maybe in the last few years. I could not get any reason, maybe because of floods, especially in the southern part. Maybe that could be one of the reasons. Second, festival months, both October and November will be festive months. October Navratri and November Diwali. Luckily for us, both the festivals ended in October. So November and December are relatively festival free. So that way the numbers should go up this Q3. Second one, floods, of course, that is not in our hands. Let us hope that despite floods, we do better numbers this year. Then OpEx is elevated is only because of depreciation, which I explained last in the previous caller. Only because of depreciation, that too on the rate of use of assets. Only because of that reason, there is an elevated depreciation in the current quarter. Third one, in the non-interest income, luckily we had some advantages this quarter. One is on the insurance. The insurance commission has gone up. I think you may be knowing the commission being shared by the insurance companies to finance companies like us. The percentage is going up. That is one of the reasons. Other than that, in the current quarter, we had a recovery from technically written off account. It was 8.43 crores against 2.83 crores in the last year. Same way, in FD, we had some surplus funds which we deposited in fixed deposits. That gave us a good income of around 15 crores this quarter.
Got it. So just a follow-up on that. So basically the non-interest income component, which is a combination of insurance commissions and recoveries, they are a little lumpy this quarter and will not recur unless, of course, if we are able to continue the same level of recoveries from written off accounts that we've seen in this quarter.
Okay. See, insurance definitely will go because it is also dependent on the disbursements. So the more disbursement I make, I may get more insurance income. So insurance, I don't think there is any reason that may drop. Recovery from technically written off accounts, yes, last quarter maybe we had a big recovery in some of the accounts. The same, we still have nearly 100 crores of technically written off accounts. So any recoveries we are making in those accounts will help us. So we are quite hopeful that because of the recovery efforts that we are making, we will be able to maintain, if not 8 crores, definitely there will be a sizable income from this written off accounts. And fixed deposits, we have now decided as a policy to keep around 1 month, 1 to 1.5 months of disbursements in fixed deposits. So more or less, the income will continue.
Got it, sir. And so sorry to kind of labor upon this. While you said you explained it to the previous participant, why is the depreciation you said has moved up from 4 crores to 9 crores sequentially?
I could not get you.
So you said, right, I mean, the depreciation is higher this time around. So you gave a reason for that. Okay. What was the reason?
There was a mistake. There was an error in the first quarter on the amortization of this rate of use assets. So that got rectified.
Got it.
So the next quarter there will be a dip. There will be a dip in the depreciation. Okay.
Understood, sir. Understood. Great. Thank you so much. That's all from my side. All the very best.
Thank you.
Thank you. Before we take the next question, a reminder to the participants, if you wish to join the question queue, you may press star and 1 on your touchtone telephone. We take the next question from the line of Raghav Madhavan from Kotak Mahindra Bank Limited. Please go ahead.
Thanks again. Sir, just wanted to have 2 questions from my side. On the asset quality part, can you give guidance what percentage of restructured book is at NPA now? And how is the performance of this book? That's one. And second, in general, want to understand in the geographies and market that you're present, how do you see the sector evolving considering the larger, view on the NBFC sector itself of over-leveraging, etc. Do you see such, similar issues among your borrowers as well?
Okay. See, out of our 550 crores, the NPA from restructured book is only 150 crores as of now. It was once upon a time, it was around 200 crores. It is now only 150 crores in September 24. Out of this 550 crores, 150 crores is from the restructured book. Okay, it is coming down. It's coming down slowly. It was 168 crores in June. It is now 150 crores. Now, on the geography, see, the areas where we are operating, competition stuff, I think I need not explain. Both in South and the West, almost all the housing finance companies are there. So competition-wise, it is okay. It is tough. But as regards the other issues that the industry is facing, especially the NBFC and MFI industry is facing, HFCs are not affected, I think you may be knowing. So the competition will continue as far as HFCs are concerned. Since we are the HFC sector, the other, these clean loan issues and all that are not applicable for HFCs.
Understood. Thank you, sir. That's it from my side.
Thank you.
Thank you. We take the next question from the line of Rajiv Mehta from Yes Securities. Please go ahead, sir. Rajiv, sir, your line is in the talk mode. Please go ahead with your question.
Yeah, can you hear me now?
Yes, sir, we can hear you. Please go ahead.
Sure. So, sir, I have a few questions and I'll just quickly cover them. In terms of sales and collection manpower, can you quantify what is the strength of sales now and collection now, and what is the addition plan in the next 6 months?
Okay. Sales is 172 as of now. Collections is 180 as of now. Sales may go by another 20-30 by year end. Collections may not be much.
Okay. Understood. You spoke about engaging with DSAs, corporate DSAs and connectors of late. What is the current share in the disbursement, in Q2 disbursement, and what is the aspiration of what share they can become?
It's going up. It was around 30% earlier. Now it is going up. In the last month, it was around 40%. But overall, I think we may end up around 40% by year end.
Oh, for the whole year?
Yeah. For the current year, we may end up, because that percentage is going up. Because connectors we have added in the current year. So slowly connectors percentage is also going up. And DSAs are also going up. So overall by year end, both DSAs, connectors, DSAs all put together maybe around 40% compared to around 30% last year.
Understood. And sir, can you comment on the reduction that we've also seen in stage 2 in this quarter? So this quarter was not really very conducive, but still we've been able to reduce stage 2. So how do we look at stage 2 number? Because it's still elevated at 11 odd %. So what is the aspiration of taking the stage 2 number by this March and maybe by next March also? Now that we've added a lot of collection people for the buckets.
Yes. So our focus now, especially by the collection team, is only on stage 2 rather than even on stage 3. Stage 3 is separately being followed. So stage 2 is our focus area. Whatever reduction has happened, in fact, personally, we want to do, the team wants to do still better. So we are focused, and this 10%, we are confident that we will be able to achieve this 10% of the AE. But still, it is on an elevated level compared to all the other peers in the industry. We are hopeful that in the next 1 or 2 years, we will be on par.
Sure. And just one last thing on the incremental lending rate. So while you gave out the profile of the customer from a credit score perspective being average 750, so can you give us the incremental lending rate for home loan as well as for home equity and the incremental ticket sizes for both home loan and home equity?
Incremental ticket size, I can say it is 20%. 1 minute. Interest rate only I'll give you. Home loan is 11.2 in September. Home equity is 13.8. Average is 11.8.
Okay. And incremental ticket size, you said 20 lakhs for both?
20 lakhs. 20 point, I do not have separate thing. Overall, it is 20.3 lakhs.
Okay, sir. Thanks so much.
Thank you. Thanks, Raj.
Thank you. We take the next question from the line of Kamal Mulchandani from Investec Capital Services. Please go ahead.
Hello, sir. Just a follow-up question on the previous participant. Did you say that the employees in the sales are only 170?
Yes.
If I'm not wrong, the total employee strength is around 1325.
Yeah. Correct.
So can you then give the
overall breakup as well? Yeah, I can tell you, sir. See, sales, what we call it sales people, the foot on street sales team is 170. It is not only they, the branch head is also doing. So branch head is around 200. So 200 plus 170, that is around 370 people are there for sales. A sales vertical, that is the junior level people who will be in the street, it is 170. The branch head also will do. In addition, we also have DSCs for our off-roll, that is separate. So all these people will be on sales. Collection is around 180. We also have credit people. We also have operations people. And we also have administrative level at head office, regional office, and all that. All put together is 4,350.
Okay, so DSCs are some separate numbers. So how many are the DSCs? Sorry?
That is not within this 4,300. 40. That 40. Is apart from 1,325.
Okay, got it. Sir, if I may have missed it, but did you just tell what was the BT out rate for the quarter?
The quarter is 65 crores.
Okay.
BT in was 121.
Okay, got it. And sir, any specific targets? Because you said that you would fall short of 100-200 crores for the AUM guidance of roughly 15,000 crore. So, are there any strategies if we would be able to meet this AUM growth target? Maybe or some strategies to reduce the repayment rate, which the team is undertaking?
Definitely, sir. So there are so many activities going on to stop this repayment as much as possible. We have engaged. There is one CIBIL Connect. So through that triggers, so we get triggers. We pass it on to branches, so that branches as well as from head office we talk to the customers. We keep on engaging with the customers through various call centers and all that. We keep on engaging to get their feedback and all to satisfy them. And we also have our own retention policy, whereby wherever interest rate reductions are requested, we try to meet as much as possible the request of the borrowers. With all that, we are hopeful that the repayment numbers will come down. But that said, some of the VTOs are inevitable. So the way out is to increase our numbers, disbursement numbers as much as possible to meet the repayments as
Okay, sure. That's it from me, sir. Thank you so much.
Thank you.
Thank you.
Thanks, Kamal.
The next question is from the line of Vikas Kasturi from Focus Capital. Please go ahead.
Hello, sir. Sir, in one of the earlier calls, you had mentioned that the people in stage 3, you were going to auction the properties, and that was going to force them to come and do the repayment. So any updates and progress on that activity, sir?
So it is an ongoing project. It is not that we will do it only in one quarter. It is an ongoing thing. So whenever any NPA account reaches that auction stage, we will immediately go for auction. I will tell you how many auctions we did last quarter. 490. See, in the current year, so far we have issued 500 auction notices alone. In addition, possession notices another 447. So almost 1,000 notices we have issued in the current year itself, in the current 6 months. In addition to the demand notice of another 1,700. So almost 1,700 notices we have issued in the first half year itself. So this is an ongoing thing. It is not that we do it one month and stop next month. And we also plan to do it aggressively. In December, we want to do a mega auction and all that. That way it is happening. So as I was telling in the previous call, the auction success is not only how many properties we sell, we auction. It's also dependent on how many borrowers come to us for negotiation and how we are able to negotiate and get the accounts closed. That way, if you see, the numbers will keep increasing. Only thing is we have to keep on mounting pressure on the borrowers.
Sir, if I may ask, thank you for that explanation. But a follow-up would be, sir, now a lot of customers would be in the NPA bucket for many years, right? So are there still such people who have been in that NPA bucket for over, say, 2-3 years?
Yeah. As I was telling, see, out of 550 crores, the recent NPAs are of only 550 crores, which means pre-COVID is around almost 500 crores.
Okay.
So these borrowers, in addition to the recovery actions that I have already told, we are also offering them some carrot in the form of a special OTA scheme. So in the current year, we have formulated a scheme so that these customers come to us for negotiation. They are also getting satisfied that they are getting some discounts in their schemes. In interest, we are giving some discounts, penalty waivers, things like that we'll do.
Sir, the part that I'm not able to understand is, you said you sent, say, 1,000 notices. So, and there are still more customers who have been in the NPA bucket for many years. So my question is, like, what is stopping you from sending notices to all of them, say, increase the number of notices to, say, 2,000 or 3,000, depending on how many years there are cases?
Yeah, Mr. Vikas, see, it is a process. See, I cannot just like that today I issue a demand notice, tomorrow I issue possession notice. There is a timeline under FY Act. This is one thing. So if I issue demand notice, at least I need to wait for not less than 60 days. So it may be anywhere 3 months before I issue the second notice, and another 1 or 2 months before I go for an auction. This is first point. Second point is there is a possibility that the customers go for any court authorities not to get a stay done. So that way also there is a delay in the processes. So these are all things which are delaying. But despite all that, we are also taking up with through our lawyers to see that these any stays and all are getting patched so that we go ahead with our recovery action. And auction successes will be more when we take a physical possession. Okay, compared to, I think you may be knowing, there are two things. So physical possession is more effective. So for physical possession, again, we have to go through a different administrative route before we take a physical possession. So that too takes time.
Got it, sir. Well, thank you for the explanation, sir. Thank you.
Thank you. Thank you.
Thank you. A reminder to the participants, if you wish to ask a question, you may press star and 1 on your touchtone telephone. Participants, if you wish to ask a question, you may press star and 1 on your touchtone telephone. We take the next question from the line of Anand Mundra from Soar Wealth. Please go ahead.
Sir, just a follow-up question. I missed the point about the other income. One was the insurance, other is the recovery from the write-off assets. Is this correct?
Yeah. Recovery from technically written off assets.
And what is the amount of technical write-off assets, sir?
From 100 crores?
What is the total amount?
Approximately.
Approximately?
Technically written off total in our book is around, total technically written off accounts is approximately 100 crores today.
100 crores. So whenever we are recovering something, it will come as part of other income.
Yeah, correct.
Okay. Thanks a lot.
Thanks, sir.
Thank you, sir. The next question is from the line of Raghav Madhavan from Kotak Mahindra Bank Limited. Please go ahead.
Sir, in the restructured book, what will be your stage 2, sir?
Raghav, stage 2 is approximately 200 crores. Approximately 200 crores.
Okay.
149 plus 15. Okay.
Okay. Thank you.
Thank you. Ladies and gentlemen, we take that as the last question for today. I would now like to hand the conference over to the management for closing comments.
I think almost all the participants, I think the questions they have answered, I think it has covered almost all the points. Once again, thank each and every one of you for showing interest in this company. As I told in the initial beginning, the company is on the growth path. We are quite confident in the coming years, the company will reach the heights which was there a few years back. I thank each and every one of you. I also thank Yes Securities as well as Chorus for making all the arrangements for this conference call. Thank you once again.
Thank you very much, sir. On behalf of Yes Securities, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.